Hey guys, welcome to the Texas Mortgage Boss Podcast. My name is James J. And today I am super excited to talk with Kelly Bush. She is an account executive with Rising Point Solutions. And credit is one of my favorite subjects to talk about. Super important. For what I do in the mortgage industry, obviously you've got to have good credit. But the reality is credit affects every single aspect of your life. I don't care what you're doing. So Kelly's going to come in and educate us on some myths, talk about some things that you can do. We're in a new year. This is the time to be proactive and attack. All right. You got to attack it. You can't be wishy-washy with your credit. You got to be in attack mode. So we're going to get in all of that right after this. Let's go. Hey, Kelly, how are you?
Hi, James. I'm doing great. How about yourself?
I'm good. I am so excited to talk to you. As I always, um, when it comes to credit, I get geeky about credit. All right, like a credit geek. You got to be a credit geek too. This is what you do, right? We enjoy it. It's a
Definitely.
Yeah. So, I mentioned on the intro, you are a account executive with Rising Point Solutions. You guys do credit restoration. You help people restore their credit, which is a absolute necessity for what I do. So, I've been working with you guys for probably a couple of years now, if not longer. But
Yes.
want to have you come on. Listen, it's the beginning of the year. I want to get some help for people as there's so much going on. We know a lot of people are going to be affected by COVID. And what I mean by that is people don't have jobs, which means credit starts to maybe become more of an issue. So I want to talk about that because this is going to be a big year in real estate, on the mortgage side, refinancing, purchases, all that stuff. But I want people to not only be thinking about a home, because this affects more than just buying a home, right? If you want to go get an apartment, they're going to pull credit, right? They're going to pull credit for virtually
Yeah.
everything now. So I know you've been with Rising Point Solutions for a little while now, and so kind of give people a little insight as to what you do, how you help people, and then we'll kind of get into giving some people some advice and kind of going over some credit myths because there's some things that people probably think about their credit that either you can demystify or help people with. So yeah, give us a little insight on kind of what you do, how you help people, and what you guys do over there at Rising Point Solutions.
So yes, first and foremost, what we are in the business of is helping clients restore their credit
Mhm.
profile. Once again, this is so that they can get into the, home of their dreams.
Yep.
If they want to refinance, there's other things of that nature. I love this company, Rising Point Solutions. They've been in business since 2004. They have a AAA rating with the Better Business Bureau, and we're referral based. So it
Yep.
is very important that our clients, the consumer, is successful because it's a reflection on us and you as
Absolutely.
well. I mean, you trust us to do this
Sure.
job, and in return, we want to be successful for you as well.
Yeah. So I refer a lot of people to you guys, and some people are, they're of the mindset that maybe they had a bad experience with other companies, which is why I love you guys because you do have a great reputation. But for people that may have had a bad experience before, can you kind of touch on a little like what you guys do, maybe a little differently, how you see results? Because again, I refer people to you, and you are so right. I don't refer people if I don't trust them because you're right. It comes back to me ultimately. And I've sent a lot of people to Rising Point Solutions and I've seen the results. But for maybe people who have maybe not had a good experience with another company or previous company, and there's some big names out there, I won't even mention them. But what do you guys do? Maybe that's a little different as far as either communicating with the clients. And I know you can't promise anything, right? I know you guys don't promise your score is going to do this, and you hear that. I hear commercials about this. Oh, we're going to make your score, go up 50 points, and I'm like, really? I laugh when I hear these commercials, but for you guys, kind of walk people through kind of some of the I guess maybe the process for you in a nutshell. You have to elaborate too much on this, but what you guys do that might be a little different from maybe what they've experienced before, what they've heard on TV or radio.
So definitely, we don't make promises, and we'll tell
Yeah,
you that right off the bat. We're not in the business of making promises. What we
yeah,
will promise is that we will advocate with, aggressively to help you improve your credit profile.
yeah,
The other thing is we work strictly under the Fair Credit Reporting Act, and
yeah,
those are laws that help us success in creating a positive credit profile. I
right,
think that's what we do differently.
yeah,
I like that our company is just, we are truly in the business of taking care of that client. And we try to do it within a 6-month period. 90% of our clients are within that 6-month period. They are done within 6 months. The other
yeah,
10%, it's either going to be finished earlier or they're going to take a little bit longer.
yeah,
But once again, we're going to do 100% with you, or you're going to do 100% of nothing. And then there's no movement, no change, no progress. So we are in the business of promising that we will work strictly for you and, advocate on your behalf.
yeah,
And in hopes that there's a change, a positive change. And if not, we're going to give you tools that will help you on your own. It's a joint effort. And that's what we like and strive for, is to work together with that client.
yeah, yeah. Now we talked about this a little bit before. Listen, people could try and take this and tackle this on their own, right? It's
Mm-hmm.
a
Okay, definitely.
so I want you to talk about this because yes, you can try and tackle this
Yeah.
on your own, right? You can, but you don't know the law.
Yeah.
It's
We
super,
all
super
wish
simple.
this was
So yeah, tell people about what you guys do because again, people might say, "Well, I don't need that. I can," because I hear it all the time when I recommend.
oh,
Sometimes I recommend people to you guys. They're like, "Well, I can just do it on my own." And I'm like,
yes.
maybe not the best idea. So
Right.
talk about kind of a little bit like the law, the process, the timing of this, and what you guys do because you're going to save people so much time trying to figure this out on your own.
Just like anything else, we can do this. If you're persistent enough, you can go and do this yourself.
Yes.
It's public knowledge. It's out there. But the thing is, you have to have patience and you have to have the time to allocate to it. I mean, it's constant emailing and recording that document, having that documentation, making the phone calls. And you have to advocate. You have to be persistent with those creditors
Yes.
because they're not going to just give in. So that's what we do because we do know the laws, and that's
Yeah.
why we work with the Fair Credit Reporting Act. We have people that are your specific case manager that work solely for you
Yep.
to help you get that good credit. So, just like going to get your oil changed, yeah, we could do that. We could change a
Absolutely.
flat tire, but
Yeah.
why? Our
Yes.
time is much more valuable. We can use it towards something else. And why
Right.
not pay someone who knows the laws, who has the time, who's working for you? So yeah, that's what the
Yeah.
advantage we have.
Yes. Yeah. So time. I mean, it really was on the time and knowledge, and you want to expedite getting your credit to a place if it's not already there, getting it to a place to
Mhm.
where you're going to be able, whether you want to get a home, get a car, get
Yes.
an apartment. Now, I mean, what we do, yes, we specialize in homes. That's kind of what we specialize in. But I mean, again, it doesn't matter what you are doing. It does not matter. I tell people this all the time. It
This
doesn't
is
matter.
a life tool.
It is. It is. And at this point, I mean, listen, people nowadays, you're going to apply for a job, they'll look at credit, apartment, insurance,
Yeah.
rental car, you name it, they're going to pull credit. And so
Yeah.
you put yourself at a disadvantage when you're not being proactive about this. And so I want to get into some of these myths that people may have about credit and things that people can do to help themselves because I mentioned this in the intro about just being proactive about it. I think a lot of people just, I talk to people all the time, and when I pull credit reports, and they're like, "Oh, I didn't even know about that. Oh, I didn't know about this. I didn't." Listen, you got to know. Like, if you're an adult, you need to
So
know.
you can assume. You can
Yes,
assume. Um,
yes,
And that's one of the things to tell, carry on from what you had said, is that it's not just about getting you into that home.
Yes.
Yeah, we could get you a couple of points here and there, but
Right.
that's for us, for Rising Point Solutions. It's not about getting you into the home or getting that perfect score. It's about getting you the best score possible for you.
Yes.
So, I mean, because other than just getting in the home, you got to fill the home. If your car breaks down, you're going to have to get a car, and they're going to pull your credit. You want to refinance in a couple of years, you're still going to need that credit score to be high. So there's other, factors into your credit score. It's not just about buying a home. It's a life tool that you have to utilize.
Yeah. No, you're 100% right. And I tell people all the time, like, if you want to, you want to purchase furniture for the house, if you're not going to pay cash for it, you're probably going to go do financing. And the thing about credit, and specifically what we kind of do, what I do in the mortgage side of the business, buying a home is probably the one thing that you can't get away with just having half-ass credit. Pardon my French. Because the reality is, you could probably go buy a car. They'll charge you a ridiculous interest rate if your credit sucks, but you can probably still go do it. You can go buy a car. There's so much that you can get without having good credit, but there's a whole lot. You're paying for it, right? You're paying for it like crazy. So I want to talk about some of these myths, and the first thing I want you to talk about for me real quick is the difference between maybe a mortgage credit score versus any other credit score, because this is the one thing I get almost on a daily basis, multiple times when I talk to people. Oh, I check Credit Karma. My score is 650, and I automatically, I laugh inside. But this is the thing, people, and I want you to talk about this because people don't really understand it. They just think Credit Karma is my score is 700, and I tell people, no, it's not. So can you talk a little bit about the difference between these scores on a Credit Karma, difference between, if you go purchase a car, right? It's a different credit score when you go buy a car versus applying for a mortgage. So talk a little bit about this, because this is one of these, I don't know if this is necessarily a myth, but I hear this on a daily basis that people think their score is, one thing. And then I look at it on the mortgage side and it's completely different. So can you talk a little bit about that and why that is?
So there is a difference between, say, the Credit Karmas, the Identity IQs, all that versus a mortgage credit score. And that is because the Credit Karmas and such, and I hate to throw their name out there, but it is a fact, those are soft pulls.
I did too. Yes. Right. No, I did too. But this is the thing. You and I hear this all the time. I know you hear it because I hear it almost on a daily basis. That company comes out. So they do a great job of marketing because people know about it. Now we're going to dispel the myths and educate people on what that is versus a mortgage. So I'm going to cut you off, but I know you hear it all the time too. You have to. There's no way you don't hear it all the time, because I do.
Well, so soft pulls, and that's what that is. The soft pull is not a real score. It's what we refer to in this business as a FACO score.
Right.
And they do. They fluff them. They elevate them. They want you to think, this is good. And that's probably why you have a lot of people going in and looking for homes, and then they're just like in shock. If your lender pulls your credit, which is a hard pull, that's going to be a truer score. We like to use Identity IQ. We use my FICO is a good one. But here's the thing. When it's a hard hit, it's going to go against your credit score 1 to 2 points. So that's something you want to be careful with. You don't want to get your credit pulled just for any reason. Those Credit Karmas and things, they're good to monitor. What they are, they're credit monitoring services so that you can see the changes that are taking effect on your credit profile. So that way you shouldn't take the score for face value, but it is good to utilize it for, hey, what's that? I don't remember opening that credit card, or they're not reporting my history, or things of that nature. They are good for that. Yes.
That's all I tell people. I
So
word for word. This is what I tell people. I said they're only good for when something changes on your report because it's accurate. You
yes.
know, if you screw up a payment, you miss it. They're going to report it, and it'll show up there. And so it's good for monitoring changes for sure. But I like
Yeah.
for people to understand that the way a credit score is calculated on a mortgage side, because again, unless you are maybe buying a business or you're applying for a business loan or some sort, there's very few things
Mhm.
where you're going to have all three credit bureaus pulled. I don't know anything else that you purchase where all three credit
No.
bureaus are pulled. Maybe you could educate me on that because I don't know anything else.
So how the FICO score is calculated is that the creditors, they report to all three credit bureaus,
Right.
and they have
Yes.
to pay to do that. So they may not pay to all three because they don't want to
Mhm.
spend that money.
Yeah.
And that's why
Yeah.
you see the different scores.
Yes.
And so when you're reading your score, you don't want to take your highest score, you don't want to take your lowest score, or even the average. What you're
Yeah.
going to do is you're going to take the median. And that's basically what a mortgage lender will do also, if
That's
I'm
exactly right.
correct.
Yes, exactly right.
Yeah.
Yeah. So
Um,
go ahead, Kelly.
no, go ahead. I was just going to listen to you.
Now, I was going to say, yeah, so I'm glad you brought up the three scores because people get frustrated by this too. And you just you just answered the
Mhm.
question. Okay, why do I have three scores? Well, Kelly just answered that question is because everybody doesn't report to all three because it costs them money. And you figure
Right.
if I can only report to one, save a little cash. But you figure, depending on the company, it's not one, it's thousands of people that they're dealing with.
Correct.
And maybe they just want to report to Experian, all right, or Equifax, or they just do TransUnion, one or the other. So that's why we have three. And you're exactly right. On the mortgage side, we're just going to simply take the middle score. So
Yeah.
you're
Here's a
right
good
on.
example. I sold my home. I'm so sorry. Here's a good example. I sold my home in August,
Mhm.
and one out of the three has not reported it paid off. And
Wow.
here it is,
August,
January.
we're talking August 2020. So we're talking 5 months now.
Yes.
5 months. And they
Yes.
haven't reported. Yeah.
So, so I have to call, and those are things that you have to do. You have to take care
Yeah.
of and say, "Hey, I need you to report. I want my score to go up."
Yeah. Absolutely.
So
Yeah. And this is
there's
another. I was going to say, no, this is another thing is that, I mean, if you're going to try and attack this on your own, like the follow up is everything because we're just one of them. The credit bureaus don't care about us. Let's just be real. They don't
no,
care. They
they
have
don't.
millions of people.
They're almost banking. They're almost banking that we don't have that knowledge.
Yes. Right.
That's how
Exactly.
they make their money.
Yeah. Yeah, so good. So I want to have you talk a little bit about this because I want people to get some more educational things that they can do to, and
Okay.
just general things that they can do to improve their credit. So talk a little bit about maybe how, and you have to get into a whole lot of detail about the weighting because there is a weight to certain things as it relates to your score and how it's compiled. Meaning time time you've had an account, right? How long have you had an account?
Uh-huh.
Um, the balance to how much you actually have limit, which is like one of the killers for people. All right, you have $1,000
It is.
balance, and your
So
limit
your
is
line
about.
utilization, yeah, yeah,
Go ahead.
30% of your credit score is based on line utilization.
Yeah, yeah,
So what I tell my clients is, the norm is 20%. I encourage 15 because I know some people have to use them.
yeah,
But if it was my choice, I would say, hey, for the next 6 to 8 months, because though we're working on your credit profile for 6 months, obviously it takes time to reflect on it. Hence, like the sale of my home.
yes,
Even
right,
though I told it, it's taking time. So 6 to 8 months, if you can, stay below 15% of your line utilization because that accounts for 30%
yeah.
of your credit score. The
So
other one
yeah,
is 35% of your payment history, which is the hugest factor in your credit score. You can have a maxed out credit card and you can have one 30-day late And I can guarantee you that 30-day late will drop your score 100 points. It's huge. And even if you have to make the minimum payment,
Yeah.
make it.
Yeah.
And or the other thing is call them, communicate. A lot of consumers are afraid to communicate with their creditors. You have to communicate, and it shows documentation that at least you're making good effort.
Yeah. Yeah.
So,
I mean, you're right.
35%, number one.
So 30. So right there, we got 35% on history. We got 30% on the utilization. All right. So we're already at 65%. I mean, right there. So
two big factors.
Yeah. So, and I see this a lot when I look at it, and I'm looking at credit cards, and that's usually the first, when I see a certain score, the first thing I'm looking at is balances, and then I'm looking at the limit, because it's an easy fix, meaning it's an easy thing to do, to look at and say, okay, if you do that, your score is going to go up. Not necessarily easy in the fact that everybody has to go do it. Right. Exactly. So, and then you mentioned the 15% as far as utilization. So for people to give people an example of what you're talking about. So if you've got $1,000 credit card limit, ideally you want to keep that balance at about
more than 100.
Okay.
100,
So
150, yes.
$100, $150. Now, because this is what I tell people. I say, listen, you can use it, if you're going to go spend $200, 300, whatever, but then you want to pay that balance down. And I want you to answer this question, because this is the one that comes up all the time. They pay it down, and it's $100. They actually need that balance to show. They need to show a balance, correct, for it to actually carry over and have something to report. Because I have people, and I'm sure you see this all the time too. There are people that use their credit card and they pay it off every month. They just pay it off.
Yeah.
And never actually report. So how does that affect credit scores for people that, and I know people there are people that just hate to carry a balance on a credit card. And some of those people are probably people that already have A+ credit, by the way. Those are normally not people that need work.
Right.
But there are some people that just don't like to have debt. And so for people like that, what do you say for people that just pay it off every month, but they're trying to increase their score?
So you're if you're with me, or if you're going to look to build up, buy a home, you want to build your credit score. Like I said, it reflects back to, the interest rates. The higher the score, the lower the interest rate, typically. So 35% payment history, 30% is your utilization. So the other thing is new credit, positive credit. That's 10%. So you want to have positive credit. So our job is to work on the negative credit. Your job as the client is to work on your positive credit. One, keeping your utilization down, making your payments on time, don't have your credit pulled. And then, so making your payments on time is you go out, and this is what I tell them, especially if we have to open up an secured or an unsecured credit card, is that I'm not having you open that credit card to go out and charge. I'm having you open that credit card or establish and maintain that positive credit card so that we can build your credit. How you're going to do that is you're going to take that credit card, no matter what the limit is. And I tell them $200 credit limit, perfect. You're going to take it, go get your Starbucks, go get you some Whataburger, or go fill your tank up in your car. And then you're going to go home and you're going to pay all but $5 of that.
Right.
And then you're going to put the card away. The next month, you're going to get the card and you're going to go do the same thing. You're going to come home and you're going to pay all of it but $5. And you're going to continue to do that. So it shows the creditor that, one, you can maintain a good credit, positive credit, make your payments on time, and keep your utilization down.
Yeah. No, that's perfect. Yeah, you're right on. Go ahead.
It's a game, unfortunately, but we got to play the game if you want the score.
I say, Kelly, I swear, this is what I tell people all the time. I'm like, listen, this is the game. Like it or not, this is the game.
Yeah.
And there are ways, which is where you guys come in. You know the game, right? You're in it. You know it. You do this all the time. So this just cuts down the time, if you don't really know all the rules to the game, it's very difficult to play. It really
Right.
is. So you guys do this all the time for thousands and thousands of people, and so it just helps condense the time for people, especially if you're looking to get into a home in a specific amount of time. So we've
Right.
got record low interest rates
Yeah,
right
we
now.
do.
It's say
Mhm.
that again.
So what we do is, in addition to working on their credit
Mhm.
profile, we provide them with educational tools, how to do
Yeah,
debt negotiation, all of those things. The other part of that FICO score is also it's 10% is your credit mix. So
right.
we don't want you to have 10 credit cards,
Yes.
especially if they're like Victoria's Secrets or Starbucks. Or what we are trying to get you to build is a MasterCard, a
Yes.
Discover, some type of bank card, a credit union, but you also want installment,
Yes.
So it's good to have that auto loan along
Yeah.
with 2 credit cards, or furniture and 2 credit cards. It doesn't have to be a lot. It's just all in how you use it. And then your length of history is
Yeah.
another 10%. If
Yeah.
you A lot of people, that's a true myth, is that people think they have to close their credit cards and they're good. I
Oh
have no
God.
credit cards. I'm good.
Yeah.
Unfortunately, you have to prove that you can be responsible with those credit cards. And
I
we need
know
to
it.
see that history.
Yeah.
It's almost
Yeah.
like a resume.
Yeah. It is. That's perfect. It is. I mean, it's your credit resume. It's a resume of how
Yeah.
responsible you are to pay back debt.
Yeah.
Um, again, I know there are people, and there's a lot of people that live by this whole debt free. All right. To each his own. I just feel like there's so much that's involved, and when it comes to having a ton of personal debt, like yeah, it's probably not a good thing. But
Mhm.
I'm so glad you brought this resume thing up, because there are a lot of people that I deal with, and I'm sure you do. They do not want credit. They just don't. They don't want credit. They don't like it. They
Well,
don't
you
like
better have
owning
cash.
people. Yes. And unfortunately, if you don't have 150, 200, 300 grand in cash and you want to get a mortgage, there's millionaires. And this is funny because I've had a few people that have got tons of money that can't get a mortgage. They can't get a mortgage.
Oh,
And
wow.
they assume that just because they make a ton of money that they can just get a mortgage. But there's still rules when it comes to getting a mortgage. Just because you
Yeah.
make $1 million a year doesn't mean you just get a mortgage. It doesn't work like that. So,
No,
but I'm glad you brought up
unfortunately.
the resume, because it literally it is a resume of how you pay back debt. I mean, and if you don't have a resume, nobody can judge you. Nobody can, because it's a risk. Everything with lenders, much like
Yeah,
insurance, it's all about risk. And if there's nothing to judge you on, it's more of a risk.
true. But I don't want people to feel that intimidated by it either, because
Yes.
I mean, 79% of us, or 80% of us, or 100 for that matter,
Yeah.
we've all been young, made
Yeah.
mistakes, you know,
Absolutely.
then we've been, laid off and had to
Yes.
rely on credit cards. We've been in accidents, put in the hospital and we hadn't been able to work. There are all kinds of situations.
Yes.
Negligence is one. Yeah, all
Yes.
been there. It, and it can be restored, and that's
Yeah.
what we're in the business is,
Yeah.
helping you restore your credit profile. Yeah,
I'm
and
glad
so
you said that. Go ahead. Yeah, I'm glad you said that.
no, it's true, because um, I have friends. They're just like, I need help, but I don't want you to judge me. I'm not in the business of judging.
Yeah, me
I'm
either.
in the
Yes.
business of help.
Yes. Oh,
Yeah,
I get it
and
too. I get it when people want
I've
to.
met some great people through this.
Yeah. No, I get it too when I talk to people and they're like, "Well, I had this." And listen, I'm not in the business. I want to help you, right? Because I've had issues too. Young, you do things, or and listen, you talk about things coming up. Okay, we had pretty much a whole year of COVID where people got laid off. People are not going to
Right.
be able to pay their mortgage. Okay, we have a huge forbearance issue that's going to, at
Yeah.
some point, this bubble of forbearance is going to pop. I don't know if it's this year. I don't know when it's going to happen. So for those people, there's going to be a lot of people that are going to need to proactively stay on top of their credit, because if you have to get to a point of when this forbearance ends, and again, I have no idea when it's going to happen. It's going to happen at some point, right? People are going,
Oh,
that
it is.
forbearance is going to go away.
Come back and bite us.
Yes. And so, you had mentioned communicating, which I think is so huge, because a lot of people just, they forget stuff or they ignore it. And
They
then
do.
they ignore it, and they just think, I'm not going to worry about it until they have to worry about it. Right. Don't get to a point where you have
It'll go away.
Yeah, it'll just, yeah, it's like, no, it's still here. You remember that 10 years ago? Yeah, and so the communication is so huge, and again, you're right. If you're an adult, this is not going away. Like, I don't understand how people don't approach this with the mindset. This is going to affect. It can literally affect you for life. I mean, I see some people sometimes when I pull these reports, and it's just they just completely
Mhm.
just completely just screwed up their credit, and it's not that it can't get fixed. I think some people get discouraged when they see what the score is, and they just throw their hands up, and they're just destined to just not have a good credit score, because they just don't think there's it's not, it's something that, it's not going to maybe necessarily be fixed. Some people may not be fixed in 6 months. It might take you a few years, but it's still worth it. Like, this is going to affect everything.
It is. So, what people are afraid that, like what you said, they think that it's too far gone.
Yeah.
It just takes time. You got to think about all the time it took you to get to this point.
Right. Yes.
And,
Yeah. Yes.
so there's the one thing I love the credibility of this company, because we're not just going to put you in a program to put you in a program.
Yep.
There are some situations where I've had to tell a client, listen, I can't do this. I can't help you at this point. But what I can do, I'm going to give you some tips. I'm going to give you some homework, and you work on these things. Call me at any point. Call me when you have a question. Text me. Here's, all my information. I want to help you get into that home, but it's going to take some time.
Yes.
And so if you can pay your debt down, if you cannot open up any credit, if you can, those things, make your current on time. And then sometimes it's just a matter of getting new items, some history, so that we can work some age on it. So that gives us, more of a foot to work on it. But everybody is workable. I mean, it is a very workable.
Yeah, I mean, I'm going to share this so you can go, because I want to show the website, because you guys have a ton of resources here. So, but you had mentioned the, time. All right, and you're right. I mean, everybody at some point, the time, you got to put in a little time. I'm sorry, I didn't mean to do that. Let me go back here. Time. So no matter how bad it might look, don't throw your hands up. Like, don't do that. And I can feel it when I talk to some people, and they didn't know what the score was, and then I tell them, and I can just feel it. Like, they just feel like, and I get emails and things like, I'm just never gonna be able to do it. And I hate to see that, because I don't want people to just give up and quit, because it is doable. It may not happen in 60 days, but you still need to be working at this to be able to get yourself to a point of, again, for me, it's more of a mortgage, but I just think it's so much more to it than just a mortgage.
Yeah. And at some point, you got to start at some point. Yes. And it's like I said earlier, either you try 100% now, and we can make things shake and move, or you don't 100%, you don't make any effort, and then nothing changes.
Yeah.
But you've got to start at some point, at some time. Yeah. And I think, so some of the things I think for people who want to start, I think it's important that, once again, don't assume that you have good credit, or don't assume that everything on your credit report is correct. You got to prepare for what the future holds.
Yes.
whether it's a new mortgage, an auto, refinancing. And 79% of the Americans have errors on their credit
Yeah.
profile, and by no fault of their own. You know,
Yes.
I just opened up a credit profile and it had 3 social security numbers for one person. I'm like, okay, that's not
Yeah.
right. So there's
Yeah.
potential there to remove bad credit based on the error, which was no fault of his own.
Right.
So there's things like that, just making your payments on time. Don't have your credit pulled if you can. Um, if we have time, a tip also, if you're going out and buying a car, do your own research for financing. Because like I
Yes.
said, those inquiries range from 1 to 2 points. And a financing in an auto
Yeah.
sales auto, they will pull till they can get the lowest interest rate
Yes.
so that your
Yeah. And
credit
people don't.
payment looks good.
Yes. Yeah. They run that thing through like crazy at the car dealer. I mean, I've
Mhm.
had it
Do
happen to
your
me, and I no longer do it. Yeah. I mean, I think you're better served to have your financing before you go in there with someone else, if you can.
correct.
But I mean, they make money. Obviously, these car
Yeah.
dealerships make money off the financing. They make money, so they want you to go through them because they have a financial gain in that too. But that is a great tip as well. And so
Yeah.
on this website here, so this is the Rising Point Solution website. So there's a lot of resources in here as well for other people if they just want to go to the website. Walk me through some of this stuff on here where people can go and just kind of educate themselves. Why did my credit score drop? It's a great one.
Yeah.
And I
I
think
mean,
you,
um, go ahead.
no, I was just going to say, I mean, you answered some of that, but go ahead, Kelly.
So that's where credit monitoring comes in in good and positive,
Hmm.
and is a good factor to have, because then you can see why your credit scores. The banks offer it. If you're going through like your banks or your credit cards, are if you go to the top right, to the left of that green tab up top where it says resources, there's Identity IQ, which we use, and that'll help you as far as credit monitoring, and so you can maintain positive credit
Right.
and make sure that there's no errors on there. But those are reasons why your utilization is too high. You're applying for too much credit. Like I said, errors on there. So there's different reasons. That's a good tab if you go back over to the previous page. So yeah, so that would help you as far as questions on to why your credit score drops.
Right.
Um, and then credit monitoring, which segues into credit monitoring and why it's so important.
Right.
Um,
Absolutely.
it's yeah. I mean,
Good. So yeah, I mean,
it's just like your card receipt. I mean, or your credit card statement at the end, or your bank statement. Those are things you just have to monitor and watch. With so much identity theft and things of that nature going on, you just have to be on top of it. Because let me tell you, being proactive is so much easier than having to go in there and justify that it's not yours.
yeah. Very good information. And yeah, you touched on a lot of this ways to maximize the score. Yeah, the balances, the utilization, all this stuff. So yeah, go check out the risingpointsolutions.com website. And there are all these resources here. These are free resources for you guys to be able to use. Reach out to Kelly. So I've got your information across. What's the best way, method wise, for people to reach out to you, Kelly? What do you prefer? Or do you have a preference?
I don't have a preference. It's what's convenient for the client.
Yep.
I'm available. My schedule, my work schedule accommodates whatever they need. I
Yeah.
know people have to work late nights, or are only available nights, or only available on the weekends. Like I said,
Yeah.
I'm here to help.
So risingpointsolutions.com is the website. I've got Kelly's phone number at the bottom there, as well as email. So uh, again, I've got to thank you first and foremost, but we have to have you come on and do this again. I I'd love to have you come talk every single month, because this just does not get old, and it always helps people. It helps me. I'm in the business of looking at credit all the time, but I don't do so. People will come to me, and yes, I pull credit reports all day long. But you are a
Mhm.
specialist in restoration, right? Yes, there's things that I can tell people to do. And everybody's situation is a little different. Some people are not
Yeah.
too far away
Very
from
unique.
where I qualify. Everybody's different. But I usually always refer people to you guys, because I tell people, listen, Kelly will
Thank
help,
you.
even if she'll go through your report with you and she's going to give you advice, and
Yeah.
she's going to see something that I don't.
Right. The
That maybe
consultations
I'm
are
not.
free.
You're looking at it, it's the same report. Yeah, but you have a different perspective than I do, and you're going to analyze it differently than I will. So I try and send everybody to you as much as I possibly can. So I
Thank you.
appreciate what you guys do. It definitely it makes my life, I'm gonna say, not necessarily easier, but it enhances what I do, by far, and it helps people. I mean, that's really what this boils down
Right.
to. Whether you come back to me for a mortgage or
Yeah, we're
not,
in the business of helping.
yeah. So, and it's no different for me. It's just for me, it's, helping you get that mortgage for you to actually go get the home. But for you guys, you're helping us do that as well. But it's, again, I will continue to say, this is way more than just owning a home, guys. It's way more than just that. But yes, that's what we specialize in. But you want to go get an apartment, gotta have credit. I mean, they're gonna pull credit.
Yeah.
So take this information, utilize it, call Kelly, email her. If you guys have questions, you can also DM me. And then you guys, are you on? You said you do anything on Facebook, Kelly? You guys kind of post on
Yes.
Facebook more so right now. Okay, so
Yes. So we're on Facebook, and you can go via the website. You can go through my phone number, my email, any way that's convenient for the client.
got it. Awesome. So,
Yeah.
all right,
Thank you
guys,
so much.
we appreciate Kelly. Thank you so much. I appreciate you. I'm serious. I would love for you to come back and do this every
Thanks.
month with me. I really do, because this is such an important subject. And again, we're going into a hopefully this year will be better than 2020. We've got a lot of
Good.
positive things going on, but this year people are going to have there's going to be a lot of credit that gets impacted, in my opinion, this year when this forbearance stuff starts to hit. There's still millions of people that don't have a job, right? So,
Right.
you guys are going to be a major. You're going to play a major role in helping people, and I will definitely continue to send people to you to be able to help and assist all of our clients. And anybody else looking for some assistance, Rising Point Solutions, call Kelly, reach out to her. You guys are awesome. So thank you, Kelly. I appreciate it. And
Thank
we
you, Joe.
will, anytime you want to come back, because I'll bug you to come back on here. So,
Anytime you want to have me, I'm here.
got it. All right, guys. So listen, make sure you also go subscribe to the podcast. All right, Spotify, Apple Podcasts, Stitcher, all your podcasting platforms. We are there. Go subscribe. We're going to start having some different content on the podcast and a little different content on the YouTube channel. So go subscribe. Go over to your favorite podcasting platform, and subscribe there. And we will see you guys on the next episode. Thank you again, Kelly. I appreciate you. Have a great day. Bye,
Thanks.
guys.
Bye-bye.